Midland Wealth Management presents Market Insights.
Hi everyone, this is Dan Zeigler, Portfolio Manager at Midland Wealth Management. Today I just wanted to provide a quick recap for the markets for the month of April. The equity market regained its momentum with the S&P 500 climbing 5.3% for the month and is up nearly 12% for the year. Small cap companies did take a slight breather this last month, but still posted a positive return of 1.79% and are still up 15% for the year. Investors did rotate back into growth companies as large cap growth rebounded and was up 6.83% for the month. A consumer-fueled economy pushed the first quarter GDP up 6.4%, which actually marks the second fastest pace for growth since the second quarter of 2003 and was exceeded only by the reopening burst of quarter three last year. We continue to expect GDP growth for the year to be around 5 to 7%. Consumers, who account for nearly 70% of the economy, accelerated spending by 10.7% in the quarter, with expenditures largely focused on durable goods such as appliances. But spending on services also grew by 4.6%. The $1,400 stimulus check certainly helped fuel this quarter's growth and will likely continue to drive next quarter's GDP as Americans continue to spend. Also driving the equity market higher this year has been strong corporate earnings, which continue to beat analyst expectations. So far, with 60% of the companies in the S&P 500 reporting, 86% of those companies have reported actual earnings per share above analyst estimates, which is above the 5-year average. Equity markets continue to see a broadening out and participation from all sectors of the market, with energy being one of the top performers this year. Valuations continue to be elevated with the S&P 500 forward price-to-earnings ratio around 22.5 times next year's earnings, as the historical average has been around 16.5. However, if you take out the top 10 companies from the S&P 500, the price-to-earnings ratio drops to under 20 times next year's earnings, which is more reasonable. The markets did take a few days off this month when President Biden announced plans to nearly double the capital gains tax rate for certain individuals. Under the American Families Plan, Americans earning more than $1 million could see their capital gains tax climb to as high as 43.4% from 20% today. The good news is almost 75% of Americans have the majority of their wealth in retirement accounts, which would not see any capital gains implication from this increase. It's certainly too early to make rash decisions as nothing has been finalized, and we'll be closely monitoring the tax proposals. As we head into May, we wouldn't be surprised to see some lower volume and increased volatility in the equity market. We'll be paying close attention to interest rates, inflation data, tax reform, and the Federal Reserve's interest rate policy. Thanks for joining me for this month's recap.